3, 2, 1.
Now, coming to it, the crux of it this afternoon, waiting for, and that's what you are waiting for. I'm going to be very straightforward, very transparent, and generously share with you the secret equation for property investors, which it took us 40 years to formulate this equation, and it's very useful if you are embarking into a real estate investment journey. And you can practically determine the value, the right price, using this secret equation. So what is actually all about my purpose in life? My purpose in life is very simple. At the age that I am now, is just to help others to own a home. And I find passion. I find sense of satisfaction. I find sense of achievement and happiness to help others own home. That's what I always want to do. So this is for my life. And I've reached at a certain pinnacle of my life. I've helped a lot of people in the past own homes. Coming back to the real topic for this afternoon, real estate investment. Let's go into the real estate investment criteria, factors, strategies, techniques, and most importantly, the essence of it is the secret equation that you're waiting for. All right, let us flow through it. Before you get down to the secret equation, you must have the general knowledge of the real estate investment scenario, the real estate investment features, factors, essentials that you must understand first before you move into the equation. So let's talk about, there are 8 essentials in real estate investment. Let's take a look at the first essential. Now, what is the first essential say? When we are talking about real estate investment, all right, especially in property, you have learned from gurus and books what's the most important factor you have learned in property investment from the gurus, from the books, all right? What are the most important factors? And most of the time you've been taught in the books and in seminars and in the convention, you'll be getting answers and shouts from the crowd and say, location, 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 the book says so. You know? Yeah, true in a sense, but that doesn't dominate the main criteria to when you invest in a property. And that is not the only criteria that you look for when you invest in real estate. We always give the answers of, if you just work on location, 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 we give you a reply and say, it's wrong, wrong, and wrong. Why we say that? We say that because we have reasons to say that. So let us articulate with you why just location, location, and location is not the only factors that you consider when you invest in investment grade property. So what are the correct factors that the other factors will be? The first factor that we consider is not just location. Because when we are in real estate, we talk about making money. We want to talk about profit. We want to talk about capital gain. We want to talk about return. So the first thing we talk about is the yield. The yield here is defined as a rate of return versus your borrowing rates. So it all depends on what's your borrowing rates. And if you have a yield that is lesser than your borrowing rates, not viable for you to invest. So yield is very important. We put yield as number 1. Because when you talk about investment grade property, yield is number 1. Not location. You see, we never say location here at all. Then the other one we talk is about your cash flow. Because nothing can operate, nothing can continue operation if your business or the real estate that you have invested is not sustainable. So you must have a positive cash flow that comes in from that real estate that you have invested to make your real estate investment sustainable, profitable, and for long term. That's important. And make sure that the money you collected from the renter must be able to cover your loan commitment. And you must not invest in a worn-out development, worn-out place when it's an old area where there's not much of growth. So you must look for potential growth area. And how to find the potential growth area? You must be able to look from the town planners, master planning, the government policy of growing certain area, developing certain area, modernization of certain area. So that's where you can find potential capital gain. So you must take advantage of our expertise, because on our platform, there are a lot of architects, chartered surveyors, town planners, share information with you. So it's a very good platform where you will be able to get this information and make your decision based on this information. Number 4, buy from the perspective of your purchaser. So when you buy a property, you must always think about selling it, because you are an investor. You're not buying to stay. You will go to buy so that there will be demand when you want to sell it. So you must buy from the perspective of your purchaser. You're not just buying it there to stay or to occupy it or to just own the real estate for the sake of owning it. You are talking about real estate investments where you care about the future demand when you sell. So you must buy from the perspective of the purchaser who sees that the real estate value. All right? And the price mechanism, of course, applies is because real estate at the end of the day is all about the demand and supply. All right? So everybody knows about what demand and supply is all about. Right? If supply is more, demand is lesser, price will go down. If demand is great and supply is low, of course prices goes up. So there's a very simple mechanism. And negotiate and buy at the right price. This is where I'm going to emphasize this afternoon. How could you negotiate and buy at the right price and at your right timing? That's most important. So please make sure, get this thing in place, put this into your mind. And how do you do it? At the end of the day, I'm going to walk you through slowly the perfect equation of how you can buy at the right price and at the right timing. The right timing is now to buy. But what price you're going to buy? That's the question that you're going to ask. Now, when you buy real estate, always remember, never fear to borrow and never be afraid to borrow at low interest rate, and never also fear to negotiate or never fear to consolidate whatever you have and then restructure your real estate portfolio. You don't hold your real estate out of emotion. You have to restructure it according to the times, according to the market, according to your requirement. So let's say, for example, if you're always used to investing in the hotel, this is the time that you look at the portfolio again. Or you're investing in office block, in the future office block, where people don't need big offices, corporate offices anymore. And thinking about how you can move into a Soho office, smaller office, because I can perceive, I can forecast, I can imagine that in the future, there will be a demand for small office, home office, rather than corporate office. Those belong to the big. You have to adjust your investment portfolio, all right? And you must be able to package your finance for that type of requirement. And financing is don't look just finance from one country. The cross-border financing. Some finance I heard from, if you take Norwegian fund, you take Japanese fund, they're much lower, or the US funds, they're much lower than your current local borrowing for funds from your own country. So you must be able to have that type of knowledge and that type of network to be able to assist you and guide you. This is what we mean by don't be afraid to apply velocity of money. You must have a property network to do that, of course. Number 6 is, now this is a very interesting essential, is as a real estate investor, never fear to negotiate and never negotiate in fear. Why? Because if the owner wants it to be 50 million on the block building, and if you work out according to your calculations, it's only coming down to a price level with your return factor in, with your cash flow, with your yield, and with your future demand. You find that these will take a few years for gestation. So the price from a 50 million that the vendor wants, you work out that it will be about half the price, 35 million. But you feel a little bit awful if you will tell the owner, say, look, you want 50, I give you 25. It's not like buying what? Buying shirt or buying shoes. It's buying real estate. So you feel a little bit awkward to give him that price. In real estate, you don't go on that basis. You base on your calculation, based on your tabulation, based on your return, based on your potential growth, your capital gain. All these things you have to factor in. And if you come to a price that you find that it should be around within that price, go and tell the owner, this is the price. Give him the factor, give him the calculation, give him the tabulation. And don't be afraid to tell him the price. If it's a low price, tell it to him. Why do you have to be fear? The worst is you lose the deal. That's all. And you got so many opportunities to pick up deals. Why? Because in the marketplace, there are many deals. Talk to those bankers, talk to your agents, talk to the professional firm who have got vast listing for you to pick and choose. So never be afraid to negotiate, on pricing. And never negotiate in fear that you will lose the deal. That is what, through my years of experience, I'm sharing with you. Now, the last part is, perhaps you do not understand, is when you buy real estates, and these are 8 essential, and if you join our platform, you will have one added advantage. The added advantage is the 8 most powerful and proven IPM techniques in the property investment. The reason is because if you join our platform and you adopt the international property investment concept, you will be able to have an advantage over your competitors. Because this platform, if you join us, will add on an additional income into what you do. By joining this platform and doing deals with us, and matching deals with us, monetizing data with us, you have that additional income to be able to facilitate you to win over a deal that is in the marketplace. So this is the last essential, which is a very essential, because in real estate investment, at the end of the day, it's your cash flow, your funding. And then join the RICH program. The RICH program is all structured where you can have a lot of sources of income, which we're going to go through with you, I think, in the next slide. Now, this is a summary. Buy at the right price. So what is the equation? Let us briefly run through this before we come to the equation. That equation is right on the top. We have covered the 8 essential. Now comes to the right price. Take a shot on the right price. The right price is equal to X times 10 times F 100 divided by DROI. DROI is your desired rate of rental return. That one we will give you the detailed definition, the detailed calculation in a moment. Let us run through item number 3 first. Item number 3 is a very interesting equation used by a lot of individual investors, where you say 5 times MV plus MMP plus OPM property, and you can have a property chain out of this formula. It's very interesting, but let me run through it slowly to make you understand. These are for practitioners. This formula here is for individual practitioner, and we always encourage our practitioner or real estate investors to use this formula to work in group of 5 people. And why 5? You know, 1 finger there's no strength, 2 fingers there's not good strength enough, 3 fingers doesn't lead you anywhere, 4 fingers you still short of 1. So when you give a person a punch, it has to be a 5-finger punch to form a punch. So when you have 5 people working in the team, just like the vehicle, you have 4 wheels running, 1 spare vehicle right in the back of your car, you feel very confident to drive forward. So in our platform, we encourage people to form teams, to do deals, and to do real estate deals especially. That's where you have got MV here is look for motivated real estate deals, distressed property for motivated vendor, and plus MMP. When you get the good deal, don't always go and sell it very quickly and get a good commission. What you do is 5 of you form a team and see whether with your vehicle you guys can buy it over rather than to sell the deal. So this is where you motivate yourself to purchase that property first before you talk about selling it off. So you must have the ideas, the thought, the objective of having same-minded people come together to buy deals, to buy property collectively and share profit. All right? And OPM here is other people's money. What do you mean by other people's money? Most people put their money in the bank. So build up your credential, build up your credibility. Who has got the money? Every day you walk up to you drive along the road, you see big signboard, dignified building, bank building. What do? They tell you that I'm a bank, I have money. So you must know the structure, the method, the likings of the bank to be able to comply with their requirements, to take money from the bank. And they love to give you money if you know how their structure works and the requirements and the ratio they use. So this is where a platform of our IBS Global helps a lot, right? It's using the bank's money. They mean other people's money saved in the bank, you use it for financial deal. All right, this is why the 33 things freehold property. So when you join us on your platform, we always tell our individual members and investors, in your life, don't be too greedy. if you can acquire a portfolio of 33 FP, 33 FP is 33 freehold property to form your property chain, not just blockchain, property chain, right? You have more or less quite successful in life, right? If you start early, you learn it, and the chances of you acquiring 33 properties is not difficult. Why 33? Why not 34? You've been asked. Why not 35? Why not 103? Why particularly 33? In our platform, we say 33 is good enough. The rest of the time you have, the rest of the energy you have, live your life. All right? When you have acquired 33 properties. Why 33? There's a magical figure. All right? Graham, can you explain why 33 properties is sufficient for a person, for any individual, to be just comfortable and wealthy?
Yeah, if you have 33 properties and you position them right so that you get one income every day for 30 days on 30 of those properties, your 31st property is the one you live in. The 32nd property is the one you give away to your in-laws, maybe your mother-in-law, your father-in-law, or to somebody within the family. And the 33rd property is what you donate to charity, so that you can give somebody somewhere to live for free. Gives you peace of mind, gives you a sound stability, and then you'll get income every day for 30 days.
Wow, smart answer, GP. And why do you need to give one property to your in-laws?
Well, I'm not really sure about that. Depends if you like your in-laws. In some areas where you come from, because you have such a big family, that you want to donate a house to your in-laws, so you give them somewhere safe to live, and it's debt-free, so they have a good life themselves. Some people don't like their in-laws, so if you don't like your in-law, you can give two properties to donation to charities. But I suggest you give one to your mother-in-law, your father-in-law.
GP, don't you think it's rightly whether the son or the daughter or someone's daughter or someone's son will become your in-laws, you will be part of the family? Don't you think that when you fall in love, and it's always very nice to keep your loved ones happy, so you give one to your in-laws so that when they're happy...
But tell me, Jack, what happens if you give one to your in-laws, then you get divorced 12 months later?
Yeah, it doesn't matter, but it doesn't matter because it still brings you luck. Because we believe in creating happiness and love to others. So that is why we put a 33 properties. But let's move on. You got the answer right, GP. Congratulations. That's why the magical figure called 33 freehold property. Why is it so particular freehold? Because freehold doesn't attract any depreciation in your books. And you forever, your property will be going up. Over the years, it will go up. All right? The fourth one is learn the GTC One Touch. There is a lot of upside potential of the GTC One Touch system, where you can collect GTC now at very low price, keep it, store it up, and when it moves, you will be able to get very good value. So move, earn higher return on investment rather than the meager saving rates of 2 to 3%. That's what we mean by velocity of money. Be cognizant, be mindful of what your earnings are. Don't just leave your money there where you attract a depreciation over time of the purchasing power and the value of your currency. That's what we mean by velocity of money. Capital and property equity growth, all right? Capital and equity growth, you see the global trade credits are still at a very low value at the moment. So consider that, move your capital into it, and then BLHS. Can anybody on the platform tell us what is BLHS? Any of the master or mentor around? KK Wong?
Buy low, hold, and sell high.
Yes. Buy low, hold, don't sell immediate, and then hold it and then later sell high. BLHS. Now this is also applicable not just to the stock market, commodities or whatever financial instrument. In the property marketplace, it's also the same. This is also applicable. When you are having properties and you have a portfolio of properties, never be afraid to sell it off when it is boom time. When people want to buy and you have come to a threshold where you are making profit, you can sell off some of your real estate holding. Don't keep it. When you sell it at a boom time, you get back a lot of cash. So when you get, because real estate, don't ever think that it will perpetually grow on the straight line up and up and up to the sky. No, because it follows like any market. There is the cyclical cycle of the real estate. So there is ups and downs. So when the real estate reaches a certain height on the price value, then you're holding a portfolio, sell-offs, and raise cash and put it back into your cash chest, right? And then when there's a market, it's like now, the same property you sold maybe 2 years ago or 3 years ago, you can buy back 2 units of the same property at different floor, maybe on a neighboring location, or maybe at different level. You'll be able to buy back 2 units or maybe 1.5 units. So that's how you make money. But the question is, how do you know that the property value has already reached the peak? And how do you know when is the right time to sell, when is the right time to buy back? Now, if you are not trained, you wouldn't know this. You're only making a guess game. If you're just reading up the books and you're not a practitioner in real estate investment, you wouldn't know that. But if you are a real estate practitioner or investor that has been trained by us on this platform, you know whether a market will go up and whether a market going to reach its peak and it's going to come down, and whether the market going to be crashed very shortly within the next 3 to 6 months. We will be able to tell you that much. I guarantee you, I'll be able to tell you that much. Because why? All these signals are in the marketplace before the events happen. All right? And today, I'm not going to talk to you on this market boom and market boom. Today, I'm specifically talking to you about the real estate acquisition right price. There are strategies like sell before you buy is a very interesting strategy, because sell before you die is all about making use of data. You know that a certain property, a certain hotel, a certain block of building is for sale, and you can go in there and negotiate. Find out what is the ideal price, the right price that the owner will want to sell off. And then from there, you get the data. So what you do is you can form your own grouping, or you can even have your own company ready. And if you think that that's a good buy at that price, you can always be the first buyer to buy it off. And in real estate, they say you flip the deal. But there are techniques, there are ways to do a flipping of deals. So come and learn more of these proven strategies that are talking about real estate investment. Number 8. So let out before you even buy. Let out is you can, before you even invest in the property in a particular location, you can always find out the real value, the rental value of the place before you even go to purchase the property. Don't listen to anybody else who give you that, oh, this place is rented, can rent so much. Oh, this place is, the rental value is so much. Don't believe anyone. Believe in the real marketplace. How do you find out the real rental in the marketplace? Find out the supply and demand. How do you find out the supply and demand? Come and learn. We will teach you exactly the practical ways to find out the real rental value of a particular place. Right? So these are all proven strategies. Make money when you buy. This is a current downturn where you can practically move into buying a real estate or buying a deal or buying a block of building where you buy a discounted value, maybe 40% discounted value at a moment like this, at a time like this. And based on your value that you bought at the valuation price, there is a disparity of prices. That's where you can make gain right onto your books, right from day one you buy. That is what we mean by make money when you buy. Buying at the downturn market is always a good buy than buying at the up market. And you can create a property chain from the training we give you, from the equation that we will teach you, from the techniques and strategies that we can share with you. So all these strategies are all proven, been practiced, been done with, been concluded with, and over many years, many real estate investors have applied this proven strategy, and they became wealthy, and they became rich, and they are very, very comfortable applying this. And there are a lot of gurus out there, there are a lot of our students out there A lot of our mentors out there, they have applied this, and they can share with you their own experience and real experience. So this is a platform of all these real estate players in the real estate industry, as well as the entrepreneurs onto this platform. So this is a platform where you can earn and learn at the same time, and share knowledge and share profit. So this is all via our phone, via the IBS Global One Touch system that these apps provide. Now, the time has come for me to release to you, as I promised, the secret equation in real estate investment. In real estate investment, there are only two equations that you will master. Once you master it, you feel very comfortable, and you can apply it in any part of the world. It is applicable because it is an equation. And this equation works in any major cities, in any part of the world, in respect of any property acquisition. So RP times 10 times F times 10 times F is that equation. The other one is X equals to RP times DROR divided by 10, 100. 1 over 10 is the calculation for the determination of the rental value. Read on the screen is very simple. In real estate investment, first, you must learn how to determine the right price. All those things that I rattled just now and share with you for the past hour or so, it's all reduced to just one equation that you must know if you're going to embark on property investment. I promise you, if you learn this equation, you bring out your phone, turn into your calculation mode, you will be able to determine the right price of a property or investment grade property within 5 minutes. And you'll be able to either take on the deal or walk away from the deal. That is the power if you learn and equip yourself with secret equation. So let's give you an example first before you apply on these equations. You must understand in a real estate deal, first, in a real estate deal, when you come to a deal face to face, it's a decision-making process to purchase or not purchase, especially when you're buying it for investment purpose. All right? In every real estate deal, these are the players. The first player is called the vendor, the person who owns the property. Take for example, the property value, a simple example, right? Simple one. Let's say an individual look at the value of the property that the vendor quoted him for 1.5 million. Think about what is the vendor objective when he wants to sell the property 1.5 million. The main objective, he bought it perhaps at whatever value that's lower than what you sell now. He's thinking about making a profit out from the property. Number two, the agent comes along and tell you, well, I just sold a property down the road, same property, same location, and look at the documents that are signed. It's about 1.550 million because there's supply and demand in the marketplace. See, this is what I've done. All right? And the agents in their mind, what is their objective? They want to get a commission by closing the deal. So that's the objective. A valuer comes along, we are professional valuer, we are trained, and that's our passion. And usually this is what we value, and this is the price. When you engage a valuer, you have to pay them a fee. So the objective is they run their own business, they are all fee-based, and that's their business. And rightfully you have to pay the fee because they're professional. The banker in the deal who has money, and who looks at your property and say, well, looking at you, looking at the property, we have done some here, and based on the valuation price, I think it's quite a fair price. We can finance maybe 1.4 million out of this 1.5 million price that the vendor wants to sell. And what does the banker has in their mind? They want to charge you an interest. Look at the vested interest of the players in the real estate transaction. And they involve a lawyer, solicitors. Solicitors come and say, well, we give you the sales and purchase contract, and we can do it very fast for you. And whatever value you put in there, within that range, bring it to us. We do it very quickly. In 2 days, you get the sales and purchase agreement done up, and you can start moving the process of buying this property. And what is the vested interest in the solicitors in the deal, in this conveyancing deal? Legal charges. And rightfully, you have to pay legal charges because for the services rendered. So it's very fair play. So take a look seriously at this page, the various party to a real estate deal. Involve vendor, agent, valuer, banker, solicitor, purchaser. So you are the purchaser now, and you have to pay all those. The commission paid by the vendor, of course. The rest, vendor makes a profit out from you, valuer, fee, bank, interest, solicitors, legal charges, purchaser. So the purchaser must understand his position if he wants to be an investor. The purchaser must equip himself with knowledge. And with the knowledge, if he applies it correctly, he will have a good buy. Otherwise, he was stuck with the deal and he will lose money. So let's say, for example, let's do a practical workshop on this. There's an act there you see. What price am I going to buy? What is the right price for this purchase? And always remember that before I give you that equation, always remember that there are 6 reasons why people buy a property. I put it as 6 reasons. There could be more, or some may group it up and could be less, but I especially put it 6 reasons. The first reason, of course, is, can anybody tell me what's the first reason people buy property?
They need a property.
Yeah, so they need the property is either for occupational purpose or for functional use, right?
Yes.
So there's a need. So it's to stay is for occupational purpose, for functional use, maybe it's for their business or as a store. So, okay, people buy properties for occupational purpose. Second reason, people buy for functional use. You can use it for a store, they can use it to grow vegetable, or even as a place where they can put their horses and their pets, right? So that is the second part of it, is functional. The third one is, of course, they buy property because they come from different country, different nations. When the nations are at war and there are sanctions of the nations, and they're very fearful, out of fear they buy property because they want to consolidate their value holding in their country in terms of their currency. So they move up their currency conversion earlier so that they can have a higher conversion rate. And when you wait longer, the currency goes down, their value of their assets holding will be lower. So they quickly convert, move it out and buy property in a very political, stable country where the country is very stable and it is also very vibrant. So they move out their currency from their country into converting and bring it into a stable country. So people buy property out of fear, and we call it the store of value. They store the value of their own assets holding. All right, so there's a third reason. The fourth reason is people buy property because people like to buy property out of joining the Joneses. They don't need that property, but because some of the VVIPs are staying there, some of the top politicians are staying there, some of the royalties are staying in that building, I just want to have that prestigious address to buy a property there and say that I also stayed there in that building or in that location, because that is our prestige buying. And when that happens, they don't care about the price. Like, for example, buying in the Four Seasons, the price is predominantly high. When the same location, just across the road, you can get half the price per square foot. But people still love to buy at that higher price because of the name and the prestige of that building and that brand name of those big boys staying there. So we have got occupation, functional, store value, prestige buying for their location, right? And the fifth one people buy is out of speculation. You know, when the market is full of cash, when the market is good, flush with liquidity, and I think there will be a flush of liquidity coming onshore to Asia very shortly, maybe within the next year or so. Because why? With this quantitative easing of the dollar, they will be slowly coming onshore to this part of the Asia, where there will be influx of this dollar coming here to buy real estate, go to the equity market, and then you can see that there will be boom. And when that happens, the prices of property will shoot up again. But at cities as now, during this turn down, look at things that people spec. So your speculation, your guess, your timing, your appetite, so much different from my appetite. And speculators, for fear that people might buy it if you don't buy it, for fear that if you don't come in at the appropriate time, you may lose the deal. So people speculate. The speculators buy property for speculation purpose. Now, there's a few reasons. So all these five reasons that I've already enumerated just now, or mentioned just now, of occupational, functional, store of value, prestige buying, speculation, I cannot advise you because this is not my area of forte to advise you. But if you tell me that you or your group of companies are going to buy property or invest in property for investment reasons, for returns, for capital gain, that is an area where a platform called the IBS Global Platform, and this is my area of forte and my domain interest, I'll be able to reason this out with you, guide you, and be able to advise you to have a good buy. Because we have got very good data, we have got very good information, and we have got some very, very good properties where you can seriously take a look at it at this point in time where you can have a good buy. So these are the 6 reasons why people buy properties. And those are the 6 participants in the property deal. So let's take an example of this. If a property deal that has got this price quoted by these various professional interested parties, if this particular property there's 1.5 million, then rent out 5,000 ringgit, example, and you are so good a negotiator from 1.5 million with all those quoted price and value up there, if you manage to bring down a 300,000 value out of this 5 million ringgit, you gain a 200,000 on this property, where you find that even valuer give you 1.4. The deal that went down the road a month ago was 1,550, and you managed to bring it down to 1.2, and you're a very good negotiator. My question that I always ask the class is, would you consider buying this property if you are a property investor and you are such a good negotiator, you brought down this price and none other of them quoted there has got your price? Would you buy this property? Especially to those new people who have not attended our class. Anybody here I see who have not attended the class, give an answer. Would you buy a property where this property, because such a good bargain, then you are such a good negotiator, you brought it down to 1.2 million and property can only rent out 5,000 ringgit? Would you buy?
Oh, sure buy. But you don't calculate the right price, then you buy lah. Just the first one. But if you calculate, then you don't buy lah. Because I know the right price, so I won't buy.
Vendor give you 300,000 discount. You are very proud, you know, if you don't buy.
I'm a still investor, so we must use the right price formula.
Oh, so you're a smart boy, you know exactly. So let's take a look at it. Okay, how do you arrive at buy or don't buy? Right. We say that if you are into property investment, you must know this secret equation, right price. You must apply the right price formula before you make a decision. Don't be attracted, don't be carried away or be inspired by the price that is given you a good price. So you must always fall back on that equation for you to make the decision. Let me review to you the formula of this secret equation. X here is called the supply demand. So X times 10 is where a year you have 12 months, so times 10. Why 10 and not 12? We are going to explain to you in detail. So X times 10 times F is that formula. Definition of X is the monthly rental. First, before you invest in a property for investment purpose, not for any other reasons which I've already stated, for investment purpose, X is the monthly rental. So if you can determine the right monthly rental for that property that you're about to invest, that is very important, the monthly rental. Once you'll be able to determine X, you'll be able to move on to the next factor. Then there is a 12 months per annum, because you're talking about collective rental per annum basis. So you have to multiply by 10, means there are 12 months in a year. Why we only multiply by 10? Because you got to factor in your 1 month agency and your management fee and your 1 month quick rent assessment and maintenance charges. Rounded it off is about 2 months taken off from your rental per annum. And it can be slightly more sometimes, and it also can be slightly less, depending on, but we round it up just to for easy calculation, say 10. What is F? F is a very important factor that you have to be very clear of. Because when you buy a property, you're not going to buy in cash. You're going to factor in your investment cost. So the investment cost is determined by the F factor. So F factor is always take 100% divided by your desired rate of rental return. The desired rate of rental return is correlated to your borrowing rates. If your borrowing rate is 2%, and if your desired rate of rental return is 4%, it's very good. You have a 2% above your cost of fund. That's very good. But when your borrowing is already 5% and you are rent, so you have to be very careful where you borrow from. And when you borrow offshore, you borrow from cross-border, you have to be very careful of their policy, you have to be very careful with your depreciation of your currency when you're coming to pay back. So all these things you have to consider. So you've got to use your wits and your connection and your experience. And when you are in doubt, where you want to verify or you want to get a second opinion, our platform is the right platform where you can come here for some consultancy. So rate of rental return is very important when you consider buying a property. Where you're going to, how and from where your sources of fund for funding this property coming from. That's important. That's where the F factor is determined. Your desired rate of rental returns must be higher than the total loan borrowing or your cost of fund, we call it. Because if it's not higher than your borrowing rates, you are going to subsidize the cash flow. You're going to subsidize the real estate investment, which is not prudent. Your monthly rental received should always exceed your loan repayment inclusive of interest. Because nobody buys property in cash usually. Why they don't buy property in cash? Because it's not prudent to calculate your return on investment. It's not so prudent. You're using your own cash to buy cash because your capital outlay is so high. You must have positive cash flow when you want to buy a property, and you must ensure that the property has got good potential for your capital gain. So these are the factors that you have considered before you really consider making a decision to buy, to invest in this block of buildings, hotels, or an investment grade property. How does the formula work? Let's take it, example one. If the rental value of that $1.5 million property that you have negotiated down to 1.2 million, and because of the 300,000 difference you think is a good buy, without considering these F factors, you might be caught in the surprise. The amount of sales price that you buy is rather, take a look at it, 5,000, 5% net. Your minimum rental return should be at least 6%. You should at least make 1% above your cost of fund. So if you work backward, you get a 5,000 rental multiplied by 10. 12 minus 2 months, that's where you get your 10. You get a 50,000, that is where your rental value is per annum. And with 50,000, 5,000 times 10 give you 50,000. And your DROR is where you calculate your F factor is 100 divided by 6. You get a factor of 16.67. You multiply it actually with the property that can rent out for 5,000 ringgit. And if your cost of fund is 5% and you want to make 6%, 1% above your cost of fund, that right price value of that property you should only pay is 833,000. Not 1.2, not even 1 million. Why? It looks like a very low price. No, because you are a property investor. You must be very mindful of your decision because you invest property to make money. You invest property not for the fun of holding a property. You invest in property not for emotional purpose or the show-off purpose or to have collection purpose. That type of buying objective does not fall into this equation. Here, this afternoon, we are talking about investing in investment-grade property where you make money out from your investment. So this is the formula, and this is how you calculate the right price. Now let's take a look at if you are a little bit of good appetite, even the 1% above your cost of fund, you would not be happy. You say, I want to make a 7% out of my investment cost. Let's say your borrowing cost is high and you also want to make a little bit more extra. Let's say your borrowing cost is 5% and you want to make 2%. So then your purchasing value that you got to quote to buy the properties is only 714,000. So the cost of the right price, depending on your appetite of the return that you want to make. Then you will say that if I want 8%, I will be paying 625,000. But the vendor want 1.5 million. You think he's going to sell it to me? You must be joking. Now, if you want to make 8%, then you don't go and buy ordinary property. You go and buy worn-out property. You go and buy distressed property. So they're different scope altogether. So skilled property investors, they don't care what property is all about. The important thing they care is this property that I'm going to buy or invest, does it give me the return I want? And there are on many occasions, worn out property, dilapidated property, distressed property, not auction property, mind you, because I'm not good in auction property. Distressed property are this area where this is the right timing. There's a lot of distressed property where you can move in and get a good buy and make money when you buy upfront, because look at it. Look at the value. If you know how to calculate, this is how you do it. And don't ever for once that there's no such property in the marketplace. I couldn't find this type of property. It's impossible to find this type of property. That's the difference between you and us, because we run a platform and we have all these data of such properties. So do come to us and have a discussion with us. We will guide you into where, what, and what are available. So right price calculation. You see the word we use is called right price. We never say the word is correct, because the right price in your definition is different from my right price. You may want a 6%, I want a 7%. So 6% is the right price value for you. 7% is a different right price for me. See my point? If vendor sets price at 1 million and you desire a return of 6%, then what is the market renter should be at 6% per month to make it viable, 6,000 per month to make it viable. So what you do is, if actual renter from your research is only 5,000 per month, then the property is called a good buy. How do you get the equation right? The right price you should pay for the property is the participation always, the real life class. We give you ample examples. We give you a lot of workshop where you will be trained and tuned into using your calculator to calculate the right price on the spot within 5 minutes. Again, a repeat of the sedation. How do you determine market monthly rental of a property? Same thing, monthly rental X. Question is, usually we ask is simple. Can you sell a property which you don't own? When you become an agent, everything is possible. You can rent out a property which you don't own. Just be an agent. But most lawyers say you cannot sell a property which you don't own. Not true. If you become an agent, you can sell a property which you don't own. Monthly rental of a property, find out from media and website and test it out. So never be afraid to test out the rental value of a property through the various means and the wits that you have. And how do you do it? We have all those practical way where we can teach you how you can do to determine the rental value of a property before you even buy. That is why you join a platform like ours. Now, 1.2 million, the rental value return is 6%. So let's take a look at the calculations. Because in our workshop, there are a lot of calculations where we will guide you and teach you on how to calculate. Example 3, take a look at example 3. If you purchase a property at 1.2 million, what should be the monthly rental be at your desired rate of rental percent of 6%? If you want to make a 6% of $1.2 million, you take 1.2 million multiplied by 6 is 72,000. All right, 72,000. If you are not trained and you are not excluded, you will say, you will divide that by 12. All right, if you divide 72,000 divided by 12, you get about 6,000. It's wrong, because if you are using that formula, you'll be shortchanged. You should only divide by 10, because you have to minus of the 2 months where it involve agency fee, maintenance, equipment, assessment, insurance, upkeeping of your units. So your rental per month that you should rent out is not 6,000, but 7,200. So many owners did not factor in this. That's why they're always short of cash flow. They are always got caught in the cash flow. So the rental equation is property price multiplied by 6%, divided by 10, multiplied by 1/10. You'll be able to find out your rental value, the right rental value, very quickly. These are the things that you can use, and you can use it from your smartphone, turn it into a calculator's mode. In seconds, you can calculate. Given 5 minutes, you'll be able to determine the right price of a property if you apply those equations that we have just run through with you. Now, what else that this platform, IBS Global Platform, will be able to support you is you are just a few minutes from us. If you are in doubt, if you are not sure, if you forgot how to use the formula to calculate, you are short of the application, what you do is just WhatsApp us. It's so easy, and you get support. That's how it goes. So don't worry about this equation if you think it's a little bit complicated. You can always WhatsApp us, and we can give you the right rental price just within minutes through the WhatsApp because of this smartphone technology. That's why I say join the IBS Global REITs platform, acquire more knowledge and practical skills. Yeah, use your calculations, correct price equations, strictly no emotion. Don't buy property out of emotion because the property is beautiful or the feng shui is good. No, don't consider that. They've gone through the 8 essential. They've gone through 6 ways that give you determination of the right price of a property, which is X times F, 100% divided by your desired rate of rental return. We're giving you the equation of how to determine the right rental value. Is don't divide by 12, divide by 10, which is the advantage. Because you've got to factor in your 2 months on management fee, assessment, equipment, insurance, and upkeeping of your property. And now, on our platform, you join our one-day real estate course. There are 12 viable real estate investment strategy where it can help you create your wealth and your wealth accumulation. These are all tested strategy, and people use it all over time and again, and it all works. And it will be released to you, and you'll be handheld after doing our workshop onto these 12 strategies. And very quickly, what are these 12 strategies? We will teach you how you can sell a property that you don't own. What do you mean that if I don't own, I can sell a property? Right. Agents do that all the time. You sell a property that they don't own. Right? And you can be part of the team. You can be a rent. You can be trained. So you can be part of the team. So you practically go into a property business. You pay a few $100 to attend to the rent seminars. And then at the end of the day, you get the rent release. Join the property platform, and you can start selling property that you don't own. So your investment cost is only 600 ringgit. Number 2, this is very interesting. Can you control a few blocks of 5-star city service apartment within KLCC vicinity? Here we are in Malaysia, we talk about KLCC, all right? In other part of the world, we talk about the different capital city. So let's talk about KLCC vicinity that you did not build. Is it possible to own a few blocks of service apartment that the word is control. Can you control a few blocks of service apartment within the city that you do not build? The answer is yes, of course. Look at Airbnb, right? You build, they are not there. But when you finish building, they control your data. When they control your data, they can move into their customer. And that's where they have their customer move into your building. And that's how they do business in real estates, which they don't build, right? So that's how you can control so many buildings in the world and do business with it, which they don't build. That's the Airbnb business model. How do you control a city of buildings without construction then? It's also the same. Because now in today's world, the real estate industry is all about data. The data is in the deal, in the real estate deal, there are only 2 viable data that you put together. A buy data, sell data gives you a deal. So as long as you know the building is for sale, you already got a very good piece of data. Then if there's a buyer that comes along with from your colleague, from your network, from your platform, You just touch it together, you get a deal. And you are not owning the building, but you can still make money out of the building that you don't own or you did not construct by just matching up and monetizing those real estate data. All these practical applications will be released to you during a one-day property seminar. How do you enhance the property value and profit from your home? Very, very easy. If you have a home and your property is residential value, and you can always profit from your home in the sense that you can turn it into a home office. And from your home office, like what you are doing now is we have a package where you can use your home, earn from your home, and do international business from your home by taking up our home package, where it is only a very small investment cost of only $98 US. You can start this home package of owning a home business and earning right from your home using your phone. That's what we mean. Number 5, property trading using irrevocable exclusive option, pay $1 or nothing. So those days, I don't know, now maybe it may not be too applicable, but it still can work. You must be smart how to tie up legal contract using only very little money, or for valuable consideration, you'll be able to garner or you'll be able to capture the legal aspect of the contractual rights to the property for a certain period of time where you can transact on that particular property given to you with option. And this will be reviewed, of course, and be guided in our one-day property course. And using property as collateral, I think everybody knows with your property base, you can use it for collateral for so many purposes for your business, to increase your facility, to enhance your facility. You can use it for bank guarantee, you can use it for trust receipts, letter of credits, lines and whatnot. So properties are always very useful because in the banking system, they recognize property as a very good collateral. So never be afraid to own portfolios of properties. Number 7, how to enhance your land value. This is under land economics, where we will teach you how you can enhance your land value by conversion of usage, by increasing your density and plot ratio. And that's where we will teach you land economics. And a lot of developers make a lot of money. A lot of people who are knowledgeable in land economics of how to create value on the land. They have gone through this application. And we will guide you exactly how land economics work. Okay? How to make money from airspace. I think if you're not in this line, you would not be able to explain how to make money from airspace. Basically, you make money from airspace is you work on your plot ratio and also your density ratio. Because the airspace is there, so if the airspace are given higher plot ratio for you, you can build more space up in the air, you get more value for your property. All right, that's why you see high-rise buildings only built over a small space. How to make money when you buy as well as when you sell? This is the condition now. And this economic downturn is where you can make money when you buy, and once you buy at the distressed value at the right price, you can keep it for a while. Later on, when you sell, when the market is good, you make money as well as when you sell. So this is a fantastic period for people who are serious and who wants to go to real estate. This is the time. And buy real estate during downturn if you have money. But don't buy without knowing the equation, without knowing how to calculate the right price. That's why we are releasing the equation of the right price for you to buy if you want to invest at this downturn. Number 10, renter, right price acquisition, refinancing packages, all right? So if you have a certain property and you don't have cash, but you want to accumulate your portfolio, this is also the right time to look into it and use this strategy where you can refinance your packages and get your new financing. Where we on our platform, we have bankers, we have got all the professionals in the real estate industry to be able to guide you on the right strategy on the current property that you may be holding, to restructure it for you so that you can move on to acquire a bigger portfolio of your property. How to acquire and manage your own property with little or no money? This is fantastic. If you have little money, can you buy property? Answer is yes. If there is a will by you. If you got no money, Can you buy property? The answer is still yes. If there is a will by you, because the most important is about your willpower. And are you prepared to learn? Are you prepared to apply the knowledge that we teach you? Are you prepared to be actively on our platform with us? We have all those sources of income where we can guide you to make the money, to earn the money, whether it's in form of credits, whether it's in form of cash, whether it's in the form of profit sharing or income. There are so much opportunities for you. The only thing is you must be willing and you must be prepared to share and you must be active. Nobody can help you if you are not active. 12. Learn the compounding power of 8 practical applications that reach yourself. Yeah. Come and learn. We teach you how to compound the power of 8, meaning the collective power of our platform, the collective power of teamwork that will be able to bring you compounding power and create your wealth. You're alone, we cannot work alone, we cannot move alone, we cannot do business alone because we are sharing economy now. With smartphone technology, sharing economy, we just use our fingertips to do business and you have to learn that. So talk to us, talk to our mentor, talk to our coach. They were able to guide you to the right group, onto the right platform, with the right group of people who share, who are on the same like-minded people who will share your vision, who will share your deals, who will share your passion, who will be able to look into property investment as a group rather than you as an individual. So make money with property investment knowledge and skills, not with money. Make money with property investment knowledge and skills. That is required. That means, in effect, you can buy property, you can go into property investment with very little or no money, but with knowledge and skills. That's what we meant. Come and learn with us on the one-day property talk that we have. All right. So in summary, one line, condensed, the essence is, if you are into property investment, please apply this secret equation. Master the secret equation, you could be wrong. This is where the last slide is. Simple. One day property course will be able to cover all those practical workshops into giving you the practical aspects of how you can turn yourself into an astute investor. So what are the costs? The cost is usually we charge $2,005 per person to attend those courses, but we give a discount of $2,002. Now it's been reduced to $1,980. That is the value of a property cost that was before COVID-19. Now we charge $1,980. We have also a special offer for you, and it's only that you join on this Zoom today, but before the Zoom end. If the Zoom end, you pay the higher price of that is now $1,980. But if you join on the Zoom today here, before the Zoom end, you will only pay $250, and you will then have one-day workshop on the entire strategy, techniques, and application that we have spelled out just now, earlier part on the screen, on all those various techniques and tabulations that we have walked you through. And you only pay $250, and this $250, we get an offer for you as well. You can capitalize this $250 that you pay as fee for the workshop. We will give you 50 original GDC price at $5. So you will have a free course, net effectively, and you have your fee recovered when we launch the IBS Global. See, we give you knowledge, and at the same time, we give you GDC. You can recover your cost fee once you launch the IBS Global. So we urge you, come and learn, come and upgrade your knowledge with us on this platform with IBS Global in the subject called digitalization of real estate investment. This is a very interesting subject, and today's world, we are all moving forward into a digital world where big data economy is important and relevant. And with the smartphone in hand, we urge you to capitalize on the capabilities and capacity of your smartphone into making money, moving away from the frequency of using your smartphone for more social and leisure activities. And once you master this real estate application, you can have this as your business. As you observed just now, all those information, all those videos and all those slides and whatnot, you can have it and you can run this workshop anywhere, anytime with anybody who are IBS Global trained. And we will train you because why? The tabulations, the informations are all there. And you just have to run through it. And at the end of the Zoom talk, we will be there to answer the Q&A. So you just have to run it. And there will be senior, masters, mentors who will be capable and competent there to assist you to do the Q&A. And then you collect the money and you get the share. And that's why I promised you earlier part in the evening that when you go through this Zoom meeting workshop with us this evening, you take back with you not only the knowledge of digitalization of real estate investment plus the secret equation plus all the other techniques, strategies. You take home with you a business where you just have to use a handphone and the Zoom tool to start off this business. And then how are you going to be remunerated? You're going to have a property team. You're going to have a business team. And this is where you and your team will get the remuneration and the reward.